Today in this video, you need to understand how transactions are recorded when applications are oversubscribed, plus the value of each stock is issued more than its par value. That is, market value is more than the original value. We can see here in this example, the first paragraph explain the authority of the business. The Z Corporation is authorized with 5 million stock divided into rupees 50 each stock. Then the rupees 50 actually is the par value. On April 1, they decided to invite 1 lakh applications to general public at rupees 80. Remember, here is they are inviting or offering applications at rupees 80. On April 10, they received response more than the offer or invitation. The bankers informed that 1,40,000 applications money had been received. As it was decided earlier in an annual general body meeting that business is going to invite or offered or issued 100,000 applications only. So the excess application money have been refunded. The excess application money is equal to 40,000. That has been refunded. And the remaining were issued shares. Now let's see how these transactions are recorded in Journal. On April 10, actually on the left hand side, the cash is increased. That is 1,40,000 multiplied by 80. We are going to multiply here the cash with the market value, that is rupees 80. And again, receiving cash against the applications given to the subscribers. Here we have offered 50,000, but we have received it. We offered 1 lakh applications and received 1,40,000, that is oversubscribed, and also the more than the par value. The next transaction, remember always applications are transferred. Once you have received the 1,40,000 application, these applications must be transferred. Either we are refunding cash or we are issuing shares. These 1,40,000 applications must be transferred or can be transferred in two ways. Either we refund the cash to the oversubscribers and the remaining application can be transferred by issuing shares. So let's see how the next transaction is recorded. Here in this transaction, we are transferring 40,000 application by refunding cash. Here we are transferring means closing. We are closing 40,000 applications here, and also we are closing 1 lakh applications here. So all the applications received 1,40,000 are closed. Here we are refunding cash to shareholders. We are refunding cash to subscribers, over subscribers. 40,000 applications have been refunded. Amount has been refunded with the market value. But here we are issuing shares to 100,000 applicants. Remember, we are issuing shares to 1,000 applicants. Once we issue shares, we used to write ordinary shares capital. You can also write here paid up capital, or only shares capital, or common stock. So you can write here common stock as well. We are issuing certificates or shares to 100,000. And one more thing you have to keep in your mind, that once the certificates are issued, always issued with the par value here. And the premium, and in the next transaction you have to show premium. Premium is also known as capital profit, which is shown at the right side of accounting equation here at the credit side. So we have transferred 8 million application here by issuing a stock of 5 million with 3 million premium. So hopefully you have understood this example. Now let's see how these transactions are transferred in balance sheet. how these transactions are transferred in balance sheet. First of all, we can see we have only one current asset is mentioned in these transactions, that is cash or bank. You can either write cash or you can also write bank. The cash all shown at the debit side must be added and shown at the credit side must be subtracted. So one amount of cash at the debit side, that is 11.2 million, and at the credit side 3.2 million. I am subtracting the amount shown at credit side. So here, now on the equity side, as we know, the amount of debt is equal to 0. There are no liabilities shown in these transactions. So the amount of debt is equal to 0. We are writing here 0. And the amount shown, all the ordinary shares capital at the right hand side or the credit side must be added. Only one transactions of ordinary shares capital is mentioned. So we are writing here. And again, ordinary shares premium must be shown separately. So ordinary shares premium is also mentioned. It falls under the head of equity. So total equity is 8 million, and again total assets are also equal to 8 million. The liability and the fixed assets are 0. So balance sheet becomes equal.